Hello and welcome to this video on the outlook for emerging markets. The energy exporting emerging markets are of course in a great position because of the high energy prices. Their GDP is back on the pre-crisis trend. By contrast, the energy importing emerging markets are still a bit below the pre-crisis trend, just like the Western countries. But the emerging markets have not slipped into crisis either, as some observers had feared. Emerging markets have proven to be robust. However, since Corona began to fade, many emerging markets are running current account deficits again and therefore have to borrow abroad on an ongoing basis. This is not necessarily a problem. For one thing, in emerging markets, mostly private companies have borrowed money abroad and invested it profitably at home. For another, inflation-adjusted interest rates in Western countries were negative. So investors there were looking for investment opportunities and were happy to lend money to good emerging markets. However, because of high energy prices, Western countries are now running current account deficits. This means that the emerging markets will have to compete with more countries in their search for capital. But they won't be hit that badly. After all, the Western central banks are often under political influence. They will do everything they can to ensure that at least government bond yields stay below inflation. I don't think the days of negative real interest rate in the West are over. That limits the risk for emerging markets. We shouldn't write them off, but we should take a closer look at whether they continue to invest the borrowed money wisely.